Excuse me. So what all need to be presented in group presentations?
Actually, I've shared some of the presentations done by, other this thing. Have you gone through?
Not yet, sir.
So what देखो, I mean, of course, what you have to do is you have to present the Excel sheet, okay, which
Yes,
you
sir.
have made for various companies, okay,
Yes, sir. Yes, sir.
and through Excel sheet, if you can present, it's fine. I don't require anything else. But if you want
Yes,
to make it, you feel very happy to make a PPT, you can do even that, okay.
sure, sir.
So this carries, 25 marks. So that's why I want that it should be done in a proper manner, okay, fine.
Okay, sir.
तो
Okay, sir. Thank you.
आपने कौन सा चुना है अपना क्या कहते हैं
Oil oil and gas industry.
ऑयल एंड गैस ओके so we're just going to start in half a minute okay so I'm just going to share my slide okay so we have about what four students have come Mahalakshmi are you there
Yes, sir.
so okay how's the project going I mean you're able to do it
Yes, sir. We're working on the PPT now.
okay so you can present your PPT as well as your Excel sheet okay in a very I mean the manner what you have done okay so don't worry about it
Yes, sir.
okay so Ria you are part of Mahalakshmi group or different group
Or different group, sir.
okay so which topic you have chosen which industry you have chosen
So defense.
defense good because defense is a the people who presented defense in my other college they did an excellent job so it's a new sector so you get a lot of
Yes.
insights about the sector okay fine
Yes, sir.
like which is the company which is preparing making missiles or jets okay so after this uh, operation Sindoor so it has become quite a relevant industry and India started manufacturing their own defense equipments fine so
Yes, sir.
yeah Shrishti have you joined
Yes, sir.
okay so what we'll do we will start okay and Monday we are most likely to have the presentations okay fine so Shrishti if you you can just share a schedule who all going to present I mean just float it on a Google group and allot at least half an hour to each group okay
All right, sir.
okay if there is any spillover then we can either do it on other day or maybe on the same day okay
Okay.
okay so let's move on to the mutual funds okay so this is maybe today is the last day when we'll be doing equity mutual funds and thereafter I'll be sharing you an assignment okay fine so which you have to you get about 10 days or maybe 1 week or 10 days to I mean prepare your this thing. It's a very small I mean assignment which you can do very easily okay so we're talking about equity funds so then we'll move on to the debt funds later on which is a little bit a longer one so we'll do equity and debt rest you can always when once you understand equity or debt then you can understand the hybrid which is a combination of both debt and equity okay and then solution oriented others you can just go through yourself because these two types of funds equity and debt covers almost everything so we are talking about a lot of funds there are large caps mid caps multi caps small caps ELSS okay now just to revise them like for example I just pick up ELSS so first what is the full form of ELSS just Google it and find out anyone equity linked saving schemes okay fine so basically this is to reduce your tax burden in under the old scheme okay now in the income tax you are supposed to file your return the last date of filing return this time was extended to 15th of September so people have all filed so they can choose between new scheme and old scheme in the new scheme the tax slabs are tax rates are less, and you get up to 12 lakh rupees, you don't have to pay any tax. But under the old schemes, you have to pay tax little higher, but you are entitled for deductions like under section 80C, which is ELSS. That means you park your money in a mutual fund up to 1,50,000, which has a lock-in period for 3 years. So that means if you put your money here, then you can withdraw the money only after 3 years. And you get almost like, if you are at a 30% tax bracket, you get 30% savings. Suppose you invest 1 lakh rupees, your tax will go down by 30,000. Okay, maximum limit is 1,50,000. If you invest 1,50,000, so you'll get a benefit of 45,000 rupees. So similarly, all other funds which I have already shared, and there is a video which you can watch. So we talk about, like for example, we're talking about large cap funds. Okay. And then, we covered, the returns as well as the risk. Okay, fine. So we covered returns and risk ratios. Okay. So we'll just pick up one fund and, go through. I've been always talking about a fund called Nippon Fund. So let's search where is Nippon. So Nippon Fund, which is a 5-star fund, and almost like 45,000 crores has been invested. Okay. Of course, in the last 1 month or 3 months, the returns have been negative. Almost all the funds, because the stock market has, taken a beating after the announcement of the tariffs and H-1B visa announcements. And yesterday, there was a news regard to pharma also. So pharma companies will also have to pay 100% tax. So we'll understand what are those pharma companies who are supposed to pay 100%, not 100% tariff will be paid with Americans if they buy goods from Indian pharma companies. So let's go to, Nippon and try to understand. So this is Nippon. Okay. So
So your
Acha,
screen is
share nahi
not
kara.
being
Okay,
shared.
sorry, I have not shared.
Hmm.
So can you see my screen now? Okay, no issues, because what
Yes,
we
sir.
covered was what we have already done. So we're talking about, Nippon India. So how do we, arrive at this point was basically we went to the equity funds and choose the large cap fund, and then we, went to see what all money, what are the schemes. So there are about, I think, 34 schemes by various asset management companies who have invested into large cap uh, uh, funds. Okay, so these are all large cap funds. They have invested into large cap companies mainly. So we just picked up one, which was the best performing for the fund so far. So we picked up, Nippon India. Okay. So, and we have chosen direct plan. Okay. We haven't chosen the indirect plan or a regular plan. So can you see this screen on your screen? Nippon. Okay. So this is Nippon India large
Yes,
cap
sir.
fund, and it is direct plan and growth. Now, there are two kinds of plans. Sorry, one is direct and another is called the regular. And within, these plans, we have growth and we have got dividend. Okay. So if you look at this, this is growth, and this is, other one is IDCW, which is nothing but a dividend plan. Okay. This is called income distribution and capital, something. So we can just see the full form of IDCW. So this is, otherwise they used to be called dividend plans. Okay. So, so where, you get some money back every 1 year. So companies, the fund is going to declare a dividend. Okay. But you should always be investing your money most likely in growth plan, because dividends are taxable. Okay. Whereas under the growth plan, you pay tax only when you sell those funds. Okay. And you make a capital gain. Whereas in case of dividend plan, which is called now by a new name, which is called IDCW, which is income distribution, okay, plan, where, the fund will declare a dividend. Now you're supposed to pay a tax on it as soon as, on the tax will be deducted at source by the fund house. So it is always advisable, unless you need money every year, uh, if you don't have a long-term horizon, or you have a long-term horizon but you want some kind of a recurring income, then you may go for a dividend plan. Otherwise, it is always better to put your money in a growth plan. Okay. Now, there is a regular plan and there is a direct plan, and we have chosen a direct. Okay. Now, if you buy a direct plan, today it is, giving you 101 rupees. You can have to buy it at 101.3125. So this is the money which you have to spend per unit. Okay. Suppose you want to buy 1 unit. So you would need 101 rupee, 31 paisa to, invest in 1 unit. Okay. Now, of course, there's a minus 1.3 which is appearing. That means, yesterday on Friday, the market had come down. It has lost almost like 1%. Yesterday, the market was reacting to the news of, 100% tariff on pharma sector by US. So whenever we import, whenever we are, USA is exporting, medicines from our country, they have to pay now 100% tariff, the people in America. So which will, affect our companies because their profitability will go down because we can't, you know, there will be less of exports. So because the America wants to promote their own industry, so it is going to, affect the pharma companies. But yesterday it was a knee-jerk reaction because it is not going to impact most of the pharma companies, but we are awaiting for some more clarification because any company which has some presence in US, either they have a plant or a manufacturing facility in America, then they will be exempt. But India, like Sun Pharma and many companies, they have already upped their presence in America, so they may not get so much impacted. So we'll talk about that later. So the NAV is 101.31. Now, if you are invested in a regular plan, that means you would have bought it from the broker. Okay, I'll just add. So before that, the fund size is 45,000 and the expense ratio is 0.69. That means if you buy, a direct plan, you would be paying 0.69 percentage annual charge. Okay. Suppose, every year they are going to charge 0.69, whatever return the fund is generating, they're going to deduct that and they're going to, give you the balance. Suppose they're making, say, 10.69% return in 1 year. So you will get only 10%. So 0.69 will be pocketed by the fund house. Now, if you, look at the regular one, okay, and go. So what will happen? So what is the N? Huh?
So the TER increases, the total expense
Yeah,
ratio
I'll come to
increases
that. I'll come
because
to that.
there'll be
So
an intermediate party
just look at
involved
the
in
NAV
this.
of the direct, the regular one. What is the NAV? And what was the NAV of the direct one? 101.
90.67.
101. So which means 101 minus
101
90,
point
almost
something.
11 rupees has been paid as commission to the intermediary. Like suppose you are buying from a broker, so he has taken away, almost like 11 rupees over the period of time. So here also the expense ratio is 1.115%. Okay. The expense ratio is 1.5%. And whereas the expense ratio was 0.6% in case of a direct plan. So almost like 1% is going, or 0.9% is on a per annum is going to the broker. So since the broker is making money, so NAV has not gone up to 101, it has remained at 90.67. So is it advisable to buy the fund directly or from the broker? Directly. Then why, there is a regular plan.
Directly.
Why, people are buying, regular also instead of direct. So what's the reason behind that? Any idea? Srishti or I mean Pawan or whosoever replied? Now I may tell you, I'm my most of my investment, almost like 100% of my
So,
investments are from regular. So I've been paying, uh, commission to the brokers. Okay.
so it might be because some people don't have time to manage their own portfolio by
No,
themselves.
it
They
is.
take
Who
services
was
of
saying that?
others
Srishti.
who might go through regular
Srishti,
plans.
whether you buy from the broker or whether you buy
Srishti,
directly,
yes, sir.
okay, whether you buy a regular one or direct, the fund will be managed by the fund manager.
Hmm.
Okay, so the return will be the same.
No, I meant not about that. For example, some people take portfolio management services. They like go
Okay.
with an asset management company and
No, I'll
go
just
for
tell you,
portfolio management
maybe that your
services.
voice is not
So
coming
if
very
that,
clearly, so I couldn't
so
pick up
their
what you're
own
saying.
personal portfolio manager.
What is happening is
Yeah.
that if you buy it from a broker, okay, now there are
Okay.
brokers who are passive brokers, there are brokers who will, share the portfolio with you. Okay, like I have been investing through a guy who is managing my portfolio. Okay, so we have a regular after every month. So we have a Skype meeting or a Google Meet where he discusses all the portfolio with me, and then he advises me, where to invest, where not to invest. Though of course I have full idea as I'm teaching this subject, but still there are a lot of new things which are coming every now and then, and we are not in the market itself. So those people, have a close watch on what is happening in the financial markets. So they will give you a lot of tips. Okay. So and if I remember correctly, about 3 or 4 years back, they came to my house and asked me to immediately redeem one of my mutual fund. And I immediately accepted their advice. And within a week, the fund actually lost a lot of money. So they have some insights about the funds which not normal people would be knowing. So that is one of the purpose that people go for a regular. They can sacrifice like 1% kind of a return, but only when your fund is being properly managed by someone. Now, if you are going to a broker, 90% of brokers, they don't manage your funds. Okay. It's a passive management. Okay. Suppose you go to a bank like Kotak Bank or SDFC Bank, which is your banker, and ask them to invest on your behalf. So they will do it. So it is a regular plan where the bank will get, a return, that trail commission, which, the expense ratio will go up to 1.5% as in case of Nippon, but you will not get any advice. Okay. So if you get an advice and you get a proper portfolio manager, then it is worthwhile, sacrificing 1% return per annum for getting a proper advice. Okay. But it is, always advisable for the young people to buy directly rather than through a broker. Okay. Now, second factor is that when you buy from a platform, like, you buy it from a, banking app, then all your funds will be available from that banking app. So you can see, what all money you have invested. But if you have invested through the asset management companies directly, which is a direct plan, then you have to go to the AMC site. Suppose you have invested into 10 mutual funds. So you have to go to 10 sites to look at, how much money it has become now, how much return you're getting. So administratively, it becomes a little bit a hassle. Okay. But of course, there are central depository sites which sends you an email every month. Okay. Where they will, tell you how much funds you have bought from wherever you have bought. So they'll consolidate and give you a monthly, a kind of a consolidated summary. So that really helps you. But on a monthly basis, you can come to know, how they're moving. Otherwise, you have to go to all those sites to know, where the funds have been kept. And sometimes for your family, it becomes very difficult because your family doesn't know where all you have invested. Okay, so it becomes a little bit hassle for your family who are not so savvy with the systems and with, going to the asset management companies. So they should be knowing the password and everything. So that's why, it's always advisable to buy directly. Otherwise, a regular plan is basically indirect. So for older guys, the people who are not computer savvy, so for their families to know where you have invested your money, it is better to buy regular. Have you got me, my what I've said, Shishi? Is it clear? Any questions here? Pawan, Pankaj?
Yes, sir. So just one more, just could you once
Like
again could you
suppose,
explain
yeah,
it? Why
like
will the
suppose
family
like
know
I'm married.
their
I have my
portfolio
wife and my
if they do
children.
go regular?
So I have invested, lots of money. I have invested about say 7 or 8 crore rupees in mutual funds. Okay, and there are about 30 schemes. Okay, fine. If I invest directly, I mean, going to various asset management companies, so I will have, there are about 20, 30 AMCs in which I have invested. So they have, separate IDs and password. Okay. Like, for example, I'll just show you, one of the where I've invested directly. Very few funds. Okay. Like I have invested in Motilal Oswal fund. Okay. So if I go to the site, are you seeing this site? So you have to go to the site and see where, you have to just log in here. Okay, fine.
Yes, sir.
So your family should know, your wife should know where the money is gone. In case if you are not there tomorrow, what will
Hmm.
happen? They'll not come to know. So you have to enter the PAN number here. AAMPA 0250C. Okay, so then you authenticate and then you enter the OTP. Okay, so that means your OTP will come on your mobile. Okay, so there are a lot of things because normally their account is private to you, your mobile also, you keep your mobile under lock. Okay, so then you have to put another passcode. So it is, it's about three or four, kind of this thing. So then you reach to the portfolio, isn't it? So I had invested 4,22,000 in this. This is a direct plan. Okay. This is the only portfolio I put my money directly. All are through the broker. So the total current value is 8,41,000. So almost doubled, say in about a couple of years' time. So my return is about 4,18,000. So my portfolio has gone up by almost 100%. Okay. So this is how you approach when you have invested directly. So this is Motilal Oswal AMC. Okay. Fine. Where I've
Okay, so you go to the site by yourself and direct through them, whereas with
absolutely.
regular, you're going through an
Absolutely.
intermediary, they can inform your family regarding what your
Because
investments
every
are.
month or every week, myself and my wife, we sit together, and she visits this site. But she always say that it is very difficult. If you would have put it into various AMCs, I would have gone to various sites and remembered their portfolio, their password, AMC, everything. So it's always better that for easier this thing. But I'm not saying that it is always better to buy directly because you are sacrificing almost like 1% return for this convenience. Okay, so as you're saying, it is always better because if I invested directly, I'm getting 101 today. Otherwise, it would have been 90 rupees. Okay, I would have lost a lot of money, isn't it? Almost like 1% kind of money has gone by way of commission to someone. Okay, so it is always better to buy that. Now, Nippon India is basically a large cap fund, we know, and the fund house is Nippon India, which is a Japanese company owned by Nippon Insurance Company, which is one of the biggest insurance company in the world, which manages this fund. And the fund was bought from Reliance Communication. Okay, or Reliance, group had actually sold this asset management company to Nippon India. Earlier, it was called Reliance Fund. Okay, now if you look at this, just read this, Shishti, what is written large cap fund.
Yes, sir. Large cap fund. The fund has 98.46% investment in domestic equities, of which 63.08% is in large cap stocks,
Okay, now this is a large
6.82%
cap
is in
fund,
mid cap
okay,
stocks,
where they have put almost
3.42% is
98%
in
money in
small cap
equity,
stocks.
where it writes, it says domestic equity 63. Actually, when I checked it, there is some error here. They have invest almost like 90% of the money has gone to large caps, but they can also invest some money into mid caps and small caps. I'll just show you exact, how much money has been invested in large caps. Maybe there is some error out here. Okay, just read suitable for.
Suitable for investors who are looking to invest money for at least 3 to 4 years and looking for high returns. At the same time, these investors should also be ready for possibility of moderate losses in their investments.
Fine, I'm back. So, this is, if you look at a 2-year return or say 5-year return, so it will give you a return is 26% in 5 year. Okay. Whereas the category has given 19.81. That means all the 34 mutual scheme funds, they're about 34. I gave you the number here. Okay. Here they're about 34 funds, altogether. So they have all given return. So this fund has given 26 compared to the category average of 19. If you look at the return all time, more than 10 years, then this scheme has given 16.36% return compared to the category average of all the large cap 13.5. That's why it's the number one fund. Okay, so we'll talk about that some more here. So this fund has beaten the benchmark. So the blue line is the fund Nippon, and the orange line which is coming is called the BSE 100 index. So it has beaten the benchmark, significantly all throughout its life. Okay, fine. Then the returns. If you look at like a return here. So this is starting from, let's say, start from 10 years. Okay. So 10-year or since inception, the return is 16.36%, where a category average is 13.5. It started on 2nd of January 2013. Okay. So if you are, it is ranked. So there were 31 funds now, and it is ranked 4th in this thing. 10-year time frame, it is ranked top. 5-year time frame, it is ranked top. It is a 1 out of 25. So in 3 years, 1 out of 29. In 2 years, 5 out of 30. Okay. So if you have invested, say, 1,000 rupees, it has grown to 68,935 rupees in a matter of 12 years, or in 10 years the money has grown to 43,000, giving you a phenomenal return of about 15.7%. Okay, whereas the category is 13.7. So it is the top performing fund under this category. Then if you have taken a sip, you can invest your money systematically. Okay, like you invest about 1,000 rupees or any amount, 10,000 rupees or 5,000 rupees or 50,000 rupees per month. So it is always better to put your money into equity funds only systematically. SIP, systematic investment plan. You don't put a lump sum money at one go. Okay, because the market can react. Okay, now let's compare. Like if you have invested 1,000 rupees for 10 years, you have got a return of 17.56. So which is more than the return which you're getting here, which is 15.7. Okay, so this tells you that it is far better to put your money into equity fund systematically. Now 1 year, still you're getting about a 9% return, whereas how much you're getting 1% if you have put money lump sum, so you're getting about a negative return of 5%. So a systematic investment plan are always better, which gives you, it captures ups and downs every month and gives you an average return, because the markets will keep going up and down. Okay, so it will capture both the negative and positive returns, and ultimately you're going to get, in a markets which are moving up, you may get a better return. Okay, is that clear? Any questions here? So which is better, SIP or a lump sum investment? SIP will
Yes,
always
sir.
give you more. Okay, so just read this tax treatment.
SIP. If sold after 1 year from purchase date, long-term capital gain tax will be applicable. Current tax rate is 12.5% if your total long-term capital gain exceeds 1.25 lakh. Any any surcharge is not included. If sold before 1 year from purchase date, short-term capital gain will be
So just to
applicable.
give you
Current
a
tax rate
summary
is
of it,
20%. Any
suppose,
cess or surcharge is
if
not
you
included in the
buy a mutual
20%.
fund and if you sell it before 1 year, you have to pay 20% tax. Okay, but if you remain invested for more than 1 year, if you cross 1 year, then you sell it. So if there is any gain, you have to pay 12.5%. So there is a clear 7.5% tax advantage if you hold the fund and sell it after 1 year. And then up to 1,25,000 of any amount of capital gains is also exempt. Suppose you have bought it at, say, 10 lakh rupees. If you have invested 10 lakh rupees and you sold it at, say, 12 lakh rupees. So how much capital gains you have made? 2 lakhs. So you have to pay tax on 2 lakhs. But up to 1,20,000, there will be total exemption. So you have to pay tax only on 75,000 at the rate of 12.5%. Plus, of course, you have to pay some cess, which is currently at 4%, okay, which is over and above the tax. Okay, so have you got it? Suppose, so which is better? Should we hold the mutual fund for more than 1 year to get the tax benefit, or you should sell it within 1 year? Okay, so how much you pay tax if you sell it within 1 year?
So it's better to hold
And
it
how
for the
much you
long
pay
run.
after you sell it after 1 year? And what is the basic exemption, apart
20%.
from, how much, up to how much capital gain you get no tax?
12.5.
So what's an exemption? 1,25,000. I give you an example. Suppose you have bought 10 lakh rupees mutual funds and you sold it at 12 lakh rupees. Though you would have to pay, tax on 2 lakh rupees at the rate of 12.5, but you don't have to pay on 2 lakhs. You will be paying only on 75,000 because up to 1,25,000 per annum, you will be exempt from paying any tax. So you have to pay only tax on, yeah. No, there is no exemption for short term. Only the
So is
short term
there
exemption will come into play.
so is there no
Suppose
exemption
you
for
don't have
short
any income,
run for
okay,
this?
and up to say certain amount, you get a tax benefit. Like under the old scheme, 2,50,000, there is no tax. Okay. So suppose your income is only 1 lakh rupees from the mutual funds. Okay. So up to 2,50,000, you don't have to pay tax. So in that case, you will not pay tax. But uh, so you may get the basic exemption, okay, which is given to all the assessees under the new scheme as well as the old scheme. So you enjoy that. But over and above that, you get 1.25 lakh tax benefit under the capital gains. Is that okay? Absolutely. It depends upon your income tax bracket. Normally, a
Yes, so
person who's,
basically it would just depend upon your
earning
own
something out
income
of
tax
salary
bracket where
or
you
from
belong.
other income sources, so then he will not get a benefit of that tax, this thing. Okay. So he has to pay tax over and above 1.25 lakhs. If it is only his sole income, then he may get a basic exemption benefit also. Okay. Okay. Now, portfolio. Let's understand where all the money has been invested. So,
Understood.
so 98.46% has been equity, and the portfolio turnover ratio is 26%. Whereas the category average is how much? 195.78. Now, what does it mean is that, if the fund manager is not, because he is maintaining a portfolio, so he's doing some churn, he's, selling some, shares and buying new ones. So if he does more often, then the turnover ratio goes up. But if he has done a very careful planning and sticks to his, investment for a long term, because he has done a lot of research and he's going to remain invested for a longer period, then his turnover will become lower. So if you compare with the category average, which is 195.78, that means the other fund managers or the average fund managers are doing a lot of churning of the portfolio, whereas Nippon has stick with his portfolio, which is also good, because investing in equity is a longer time period, kind of a game. So you should not keep selling and buying. So you're incurring a lot of transaction cost, and it reduces, the return for the investor. And then, that means you have done some wrong selection. So you have bought it and now you're selling, so you might lose some money. So average turnover ratio of 195 uh, would be a little higher. So all those fund managers whose turnover ratio is higher, so they may not be able to generate a very good return. So is that clear? Now, so this is the kind of the investments where they have made, okay? Like HDFC,
Yes, sir.
okay? So there's a red sign here. So which means now this is the top 10 stocks portfolio. Now we can see the detailed portfolio of all the companies, okay? Fine. But in the screen, there are only 10 stocks where they have invested. And there is a red sign. Now this figure is a 1 month older data. It is not the latest one. It is not updated every day. Because if it is updated every day, then anyone can replicate a mutual fund. He need not buy a Nippon. He can do it himself. Okay. So the fund manager is going to give the data to the site only after a month, so that confidentiality is maintained about where they are investing. So this gives you 1 month lag data. Is that okay? Shristi, have you got it? Or others? Pawan? Every month the fact sheets are released and then this gets updated. So otherwise,
Yes,
anyone can
sir. They
replicate. So
release
how
their
much you
fact
have done
sheets
by
every month.
the fund manager can be known to everyone. So I'm just now, what I'm doing, I'm just opening an Excel sheet, which I think, shared with you, but I'll again share if I've not shared. So this is, a Nippon. Okay. Okay. So sorry. Can you see the Excel sheet? So this is the entire list of the money which has been invested from. If you see, this is Nippon,
Yes, sir.
Nippon India large cap. So if you can see all the funds, okay, there are all the companies where they have invested. Okay, so there are about 66 companies. Okay, the first row is the tip, this thing, so if you see 44,000 crores rupees has been invested in about 66, equities. So here, I just show it again here. So, which is the top company? Which is the first company, Shristi? SDSC. And how much of the percentage of holding they are holding in this? And look at the 2
HDFC.
months, 3 months, 6 months, 1 year. Sorry, the second column is the thing. The 3 months,
8.26%.
6 months, and 1 year. So this tells you, how in the 1 year back they were holding 9.5%. Now they are holding 9.4%, 41% of the portfolio. So this tells you about the trend also. Like Reliance, they're holding 6.5%. So now they're holding only 5.3. So that means they're reducing their portfolio in Reliance a little bit over the time. Okay. So you can have some idea about, how they're moving. Now, the second one would be to look at the category. Okay. So the category would be like, how much money has been put in each sector. So first is which sector? Okay. Then the percentage of holding is also there. Okay. Then what is the second sector? So
Automobile.
like this, you will have all the sectors and sector wise where they have put the money. Okay. So you have a complete detail. Okay. So
Capital
now
goods.
I'll just take you to the site from where we got this data. Okay. And I'll share this site also with you. So I can just, do is that I can just share this site with you so that you can also open along with me. And after this, we'll keep a small break. Okay. So I'm just giving this site. So you can go to this site. Okay. So this site gives you a little bit more detail. Okay. Nippon India Large Cap Fund. Okay. So have you opened? Is this site visible on the, can you see this site?
Yes, sir.
Okay. So it gives you portfolio overview as on 31st of August. Number of stocks. So in top 10 stocks, they
Yes,
hold
sir.
about, so number of stocks are 66. So they have invested in 66 stocks. Okay. And in the top 10, they're holding 43%. In the top 5, they are holding 27%. In the top 3, they're holding 20%. So this tells you, how much they're holding, how much the portfolio is concentrated. So if you look at the large cap, so how much money they have, they have invested in large caps? Anyone? And how much is the category invested? Other mutual funds on an average? So that means they have invested slightly less in the
84.13%.
large cap compared to the category. How much in the mid cap?
87.63.
Okay, so they have invested slightly more than the category. Small cap also 4% compared to 4.5%. Tiny caps, nothing.
10.33.
So this gives you, now you can see the sector wise allocation. Okay, fine. So the financial sector, so they have given, like in August 2025, July, June. So you can see, the trend. The trend is coming down. So that means they have been selling the financial sector stocks. Okay, from 33% to 28. Energy sectors, they have been, almost maintaining the same or rather going up. Service sector is also coming, going up rather. Okay, so like this, you have a lot of information which you can just go through for your analysis. Okay, so this is, the sector allocation versus the category. Okay, so in financial sectors, this fund and the category. So the blue one is how much Nippon is invested, and the green is how much the others have invested. Okay. Fine. So this you can just have a site your own look. So this is a complete list of the stocks which I've already shared on an Excel sheet. Okay. Now top stocks bought last month. This is very important. So which stocks they have bought? Shrishti or anyone? Lupin. So this is a healthcare, a pharma stock. How much they have invested? 445 crores. So just name the second company.
Lupin Limited.
So why they have invested in Maruti? Any logic? The GST reduction
Maruti
which has
Suzuki
happened,
India.
last month. Okay, so that is the reason. So, but
Mm,
they have invested in Lupin and Cipla, whereas yesterday these companies have performed underperformed
fair,
because of
fair.
the tariff announcement. Top stock, top stocks sold last month. So which company they have sold? Yeah. So this gives you some idea about the Nippon Fund. Where they have invested, what
Power
they are doing with the
Finance
portfolio.
Corporation.
Okay, when you are making your project, so this will be a very handy site to do your this thing. Okay, so now it's 11:13, so we'll meet at 11:35 again. Is that okay? Okay, 11:35 we'll meet. So we